complicated package with lots of elements, but broadly speaking, it was shaving off a bit of regulation on financial services and merging pension funds, encouraging the regulators to focus a bit more on growth, all of which I think is helpful, positive for growth, but none of that looked like game changers to me.
So what do you make of the budget, therefore? Because I was looking at some of the numbers in the budget, and it was clear that the message from the government was very much, once again, we're focused on growth, we're focused on growth. But looking at the numbers, they are not anywhere close to the 2.5% that the Prime Minister had indicated. Where can the government look for more sources of growth going forward? If these measures that she mentioned yesterday are not going to be enough, where should they look at?
Well, the budget obviously increased borrowing and spending, net spending, and that's expected to boost growth a little bit over the next year towards 2%, but then the forecasters think it'll come back to around 1% like it is at the moment. I think she's going to have to do some bigger things to try and boost private investment. And I think the two big items she hasn't yet talked about a lot are planning, and on the other side, methods to bring private money into public infrastructure through joint ventures, private finance, and so on. She hasn't really said much about that. But at the end of the day, this is desperate stuff. We've had 1% growth, or around 1% growth now, since the financial crisis. That's 15 years. So this is a very well-established trend, and we need to do something dramatic. The element that she did speak about, but didn't give any details, was improving relations with Europe. And I think, if we rejoined the customs union, for example, that would be a game changer. But she did rule that out again.
She did, but the governor, Andrew Bailey, was actually quite outspoken about how much of a supporter he is of free trade, and perhaps, looking at the EU, they're so close to us right now, that perhaps is the answer to provide the UK economy with a bit more of growth. Do you think it is likely that we'll actually see that? Perhaps not in the near future, but still within this Labour government. Are they likely to look at Europe as a source of growth?
Yeah, I mean, they've got to. And they've talked about, again, some minor things, veterinary standards, alignment, maybe alignment of standards around financial services to help the city. All of that's quite useful, but will be difficult to negotiate. Perhaps because of the position in the Ukraine, with Trump drawing back a bit from supporting Europe, there'll be sufficient common interest on the security front to allow us to take the hard edges off the Brexit. But I don't see us joining the customs union in this Parliament, and that, so I think this is going to be hard to get that 1% up towards 2%.
Not an easy task for the government. I would also like to get your thoughts on monetary policy, obviously, given your experience. There's a lot of discussions on how the budget is likely to bring further inflation to the UK economy. What are you looking at in terms of the dynamics for monetary policy?
Well, the bank's confidence has been a bit hit by the inflation we went through over the last few years. We seem to be back down towards target now. They're thinking it'll edge up a little bit and then fall back to 2% over the next couple of years. So I think they'll feel their way. They'll be pretty cautious about reducing rates. On the other side, we've got things which may push rates up, and the Trump presidency, it seems likely to expand borrowing over there, put tariffs on things that will tend to push up inflation, tend to push up borrowing costs across the world, not just in the US. So I'm not expecting a huge reduction in interest rates from here. I mean, I think we're back to the old normal, where 4 to 5% interest rates is what you expect most of the time.
It's interesting you say the old normal, because we haven't had this level of rates for so long that we kind of forget that this used to be the normal level. I would also like to discuss a little bit more the implications of a Trump presidency. You highlighted there, what could it mean in terms of monetary policy, but more broadly, do you think that there's any sort of way that the UK economy can actually protect itself a little bit more in terms of potential tariffs from the United States?
Well, the government will bend every effort to get a special deal with Trump. Absolutely, and it should do. I think we're slightly better placed because we're mainly a service exporter, and on goods we actually export less to the US than they export to us. So on the Trump sort of mantra, which is if you're selling us more than we're selling you, we've got to put on tariffs. There are some grounds for saying, well, the UK shouldn't be in the front line. Yeah, so we'll try to get a special deal. But of course we'll be affected by that. I mean, if Europe has tariffs put on it in a big way, that will affect the world we swim in, and it will reduce growth worldwide.
Do you think that as a result that is likely to mean that the UK will also sound more hawkish against China?
Yeah, well, we'll have to wait and see on that.
Yeah.
I mean, the last time Trump was very hawkish on China, and he did, you know, with the opposition to Huawei's engagement in our IT systems and so on and so forth. He did make us change our position, and I wouldn't be surprised if that happens again. But from our point of view, this is bad news. You know, I mean, if we're going to have tariffs on the US, we've created Brexit to create barriers with Europe. You know, we really want to continue trading with China.
But that's why I was asking you, because we can't look at this in isolation, right? We need to take also a global approach. Before I let you go, I would also like to get your thoughts on, you know, given your experience in the Bank of England, when you hear comments stateside about perhaps the president having a more active role in monetary policy, what do you make of that?
Yeah, well, that's a worrying thing. He thinks he knows better than the Federal Reserve. I'm not sure what that will come to. I mean, when he was last president, he shouted a lot about the Federal Reserve, but he didn't actually intervene, and I suspect that's where he's going. We're not going to see the same thing here, although what we have seen is the Chancellor saying growth, growth, growth. Yes, all right, keep grip of inflation, but boost growth. And perhaps one significant thing last night was the governor of the bank spoke about growth and emphasized that that's very much on his mind.